And now, the case of tax shelter finessers.
Freeze! Is fraud in order?
So within the last week, two individuals were convicted of conspiracy to defraud the U.S. It was Jack Fisher and James Sinnott. They were convicted of conspiracy to commit wire fraud, aiding and assisting the filing of fraudulent tax returns, and subscribing to false tax returns. So let's delve into this. There's a lot to unpack, so we'll try and do a quick overview. First, in a nutshell, Fisher and Sinnott were involved in designing, marketing, and selling to high-income individuals in abusive, syndicated conservation easement shelters. So basically, what these people do is obtain a piece of land and then is donated in such a way that it becomes a natural conservation easement where wildlife can, enjoy that, and they can take a huge charitable write-off. At least that's the premise of the transaction. But it can get out of control and it can get abusive very, very quickly. IRS has known about this for years, and it has been on their list of top 10 criminal things within the past decade, for sure. They watch this closely. So with the money that these folks would receive from their clients, they then would invest in these acres, which would then be donated to obtain the conservation easement deduction. So they would get the money, they would buy the land, and then they would give out all kinds of crazy deductions to their customers that they could take as a tax benefit on their own tax filings. So over the course of what they were investigated for, they received upwards of 41 million in payments and sold roughly 1.3 billion in fraudulent deductions. For the full story and more like it, check out the link in description. And folks, for daily IRS updates, tax tips, and everything small business, mash that like button, share, and follow. And if you yourself are looking to save thousands of dollars on your small business taxation, head over to myfavoritecpa.com or send me a DM today.